Hey, what's up guys? This is Kenneth and I'm back with another video. This one will be titled Market Structure. Okay, so basically what market structure is, it is the rhythm of the market. Okay, and this allows traders to read the price action. Price action is just straight candlestick analysis. Candlestick waves, and by waves I mean like trend waves, high, high, higher, low, lower, high, lower, low. Okay, and since we already identified what an uptrend consists of and what a downtrend consists of, if you aren't familiar with that, please go back to identifying the trend. You will learn what is a uptrend, what consists of an uptrend and a downtrend, and so forth. Okay, so getting into it, we can see that we have an uptrend over here. So market is currently making higher highs and higher lows. Okay, and then a downtrend is when the market makes lower highs and lower lows. So the transition from uptrend to downtrend takes place when the market breaks a previous higher low point. Okay, because what do we know? We know that the market, an uptrend consists of higher highs and higher lows. So if a higher low is violated, that means that there is now a new, there is an increased amount in sellers. Okay, and they are then shifting the structure of the market. Okay, so now we are no longer in an uptrend structure, we are now shifting towards a downtrend structure. Okay, so after an uptrend, the market breaks below the last higher low point, which is this one over here, and creates a new structure low, which is this one. Okay, that is our new structure low. Selling opportunities are only to be taken at the first lower high point, but we'll get to that. Likewise, from downtrend to uptrend, we know a downtrend consists of lower highs and lower lows. Okay, when the market violates a previous lower high point, that tells us that there is now an increased amount of buyers in the market. Okay, the bulls are coming in and they have changed the structure of a downtrend. Okay, so when that happens, when a new structure high is created, a higher low will be created from there on, and so forth. Okay, so after a downtrend, the market breaks below the last lower high and creates a new structure high. Sorry, last lower high. Yeah, the last lower high and creates a new structure high. Okay, buying opportunities would take place at the lower high. Now, just to get into this quickly, so if let's say the market broke down past a certain, let's say this level here was our previous lower high point. Okay, so let's go and have a look. Let's say this was our lower high point over there, that line. That is what I'm looking at. Then let's say this line basically is telling us that, let me just draw this out quickly. Okay, so we have our downtrend over here. Okay. That is our break. Okay. This line over here, that is our break of structure. Now, what we need to see, okay, as traders, we need to see right here, the break that will be taking place. We need to see it literally break through like this and create a new candle on top. Okay, now this makes it valid for us because we have a clean break. If you are marking up structure on the daily time frame, then this has to happen on the daily time frame. It is invalid if it happens on a time frame lower than the one that you are marking up your structure on. So if we are on the 4-hour time frame, we need to see a 4-hour candle break and one close above as well. Okay, that shows us that that is a clean break of structure, because we can have times where the market would just test. Okay, so then you will have something like this. You will have the market break through and then come back and close back inside that line. That only tells us that it is now a double top at this point in time. Okay, so we need to see a clean break and a push up, okay, to create our new structure high. Okay, new structure high over there, and then our first higher low. Keep in mind, we do structure analysis, okay, for like mostly long term. So we'll do that on our daily and our H4 timeframes, okay. This helps us identify the real shift in the trend, okay. So looking at that, we can see that our break of structure happens after in an uptrend, after we break below a lower high point. Okay, we create a new structure low, and then obviously our first lower high point. And then in a downtrend, we will break a lower high point, create a new structure high, and therefore pull back and create our first higher low point. Okay, this area right here where we break through this lower high point, that is our break of structure. Okay, let's look at this example over here. We can see that the market is clearly making higher highs, higher highs on this side and higher lows on this side. Okay, so when we are doing structure analysis, we are not taking the wicks of candles, we are using the bodies. We want the close of the candle. Okay, we want the body close and open of the candle because that shows us where the price commitment was. Okay, so in this instance, it would be on that level right there. Now, what do we have? We have a break below, and then we have a new candle open, form, and close below that level. Let me zoom in here a bit. Okay, so we have a break below the close in this area. Okay, from this candle, and that candle. Okay, we had a breakthrough, we had a new candle open, form, and close. Okay, so that tells us structure is broken. Okay, structure is broken at this point in time. Okay, we were in an uptrend and now we are shifting momentum to a downtrend. Okay, so when we look at this, we first pushed up, created a higher low point over here. Let me just put this down. We created our higher low over there, and then we had our higher high here. And then we found resistance right about there. Okay, we found resistance there, and what that is telling us is that we are in a double top formation. Okay, so we rejected the highs over here, and that is why we fell and broke structure. Okay, so this would then be our, who can guess, new structure low. Okay, that would then be our new structure low, and then we are looking for our lower high, okay, because that is our higher high. The next one would not be a higher high, it would only be a high point. Reason being, we did not create a candle higher than this one, okay? So that is just a normal high. That is our higher high because it's higher than our previous high, and this high is the exact same as our previous one over here. Okay, so then we are looking for our lower high point, our first selling opportunity. And if you look at this, we can find our resistance at this area over here, throw it across, and we can see that we basically respected one level as our lower high point. Okay, so this one level over here, that was our lower high point, and that was our area to sell. Could have been here, set in a bit of drawdown, or it could have been here on the retest, and then basically the rollover. And look how massive is that rollover. This is structure on the daily time frame. It will be just as good on the 4-hour time frame. However, whichever time frame you are analyzing your structure on, the candle breaks has to be on that time frame only. I can't mark this up, go on a 4-hour time frame, and then wait to see a candle break below like this. That doesn't work. Okay, that will be invalid. It has to be on the same time frame that you are marking up your structure. Okay, so our first lower low is actually all the way down here. This was one straight push. Market consolidated for a bit. We created a lower high point and then pushed down again to another lower low. Okay, so you see how that works. Let's try and find an uptrend. Okay, let's try and find a down. We can actually even use this because structure broke multiple times here. And that's the thing, it will break multiple times to build higher time frames. This you will learn in time frame correlation. Okay, so we basically had higher low over there, small higher low over there. We then broke through that, created a lower high, broke through that, lower low, and then we broke here. When we broke this area over here, that was our break of structure. Okay, this is our first higher low point, and then we continued from there. So new structure high, okay, higher low point, higher high, higher low, back at our previous resistance, now newfound support. See how resistance and structure play hand in hand, but structure will not always line up the way support and resistance does. You just need to basically know how to trade structure. And the tool I will give you to trade structure is called Fibonacci's. Okay, Fibonacci is a powerful tool to measure our structure. Okay, so I'll give you a quick example here. See, we came and sat on this level, this 71% level, which is a very strong reversal level, and that is where you would basically take your trade from. But you will learn that later on. And for now, let's just look at the last slide. Okay, so the lower highs from uptrend to downtrend is our first selling opportunity. Okay, we will look for candlestick patterns, candlestick variations at this point, and also after a downtrend, once we break structure to an uptrend, we will look for candlestick patterns or whatever the case may be to indicate, to basically give us a buying opportunity in this area. Okay, so guys, that is it for market structure 1.0. I will see you on the next video, market structure 2.0, and that is just going to give you a lot more clarity on how we can maintain our trades and know that basically the market is continuing in a certain direction or not. Okay, see you on the next video.